What does an escrow account mean, and what's involved in that process? Hi everyone, my name is Mike Rennick. Welcome to another edition of 2 Minutes with Mike. I am your host for this video. My guest today is
Don Bartolomucci.
You pronounce that last name so smooth. I
I've said it for 62 years.
So you're a youngster then compared to my age, but that's another video for another topic. So Don is here because he's the best mortgage guy I've ever worked with. I wouldn't say that if I didn't mean that. So what we're talking about today is escrow accounts. Help me understand what those are.
Escrows. Escrows are basically the bank's assurance that real estate taxes, homeowners insurance, flood insurance is paid on a property, protecting the interest of the property. So technically, it's the way the bank knows that each and every year the real estate taxes are going to be paid and the homeowner's insurance will be paid annually.
Because bottom line, mortgages are the first lien on a property except taxes, right?
Tax lien and a federal, the federal tax lien.
So that can take it away from the mortgage company, the bank, even if they've got a lien. So an escrow is a fund that's collected over 12 payments out of the year, right? That's collected in each payment. And the money is put away, and the bank actually, or the mortgage company actually makes the payment.
That's right.
For the client.
Yeah, so each year it's really just an accumulation or budgeting. We basically budget your real estate taxes and insurances on a 12-month basis and collect that so that it's, whenever the tax bill and the insurance bill comes due, we've collected enough money to pay that next year's premium.
So in year one, my escrow account is calculated to be X and I put in the payments. Does that mean it's fixed over the 30 years and it could never change?
Unfortunately,
No.
just like most things in life, they go up.
Okay.
And a lot of times, recently, real estate taxes, even homeowners insurance, does increase. So think about it, if we've set your escrow account based upon a certain figure, let's just call it $3,000, and next year we get a bill that says now it's $3,200, we're going to be short in your escrow account because we didn't collect enough money. Because we didn't collect enough money, we'll readjust that escrow account and your mortgage payment, not principal and interest. The mortgage payment, the total payment will change because the escrow's changed.
So when am I forced to have an escrow account?
Well, number one is any mortgage with less than 20% down.
So if I do a 10% down and I finance 90%, there's going to be an escrow.
You've got to escrow your.
If I do a 25% down, am I automatically excused from one, or does it depend on the finances?
Yeah, it depends on the financing, but most times you'll have the option to include escrows or not include escrows. But keep in mind, most people are familiar with escrow accounts and not having to get those tax bill and homeowners bills every year. And it's a big surprise when you decide you want to do it on your own, and then you get that bill, one large bill all at one time that you have to pay.
So I smile because that happened to me at one time when I paid off my condo. In fact, I had to ask somebody, where do I go to pay my taxes? I had no idea because it had happened all those years. But Don, again, you do a fantastic job answering these questions. I thank you. If someone wanted to reach out to you, and they're not required to pronounce your last name correctly, I call him Don B. Don B works, right?
It works.
And my clients, when they call me, say, I've talked to Don B, so that's sticking. How would they reach you?
941-227-7618.
Don, you do an outstanding job. I appreciate that. My direct cell, if I could be of help, is 941-400-8735. Thanks for watching, everyone.